We welcome in Kenny Polcari, Slatestone Wealth Chief Market Strategist. He's going to be hanging with me for the whole show. And Kevin Gordon, Charles Schwab Senior Investment Strategist, also with me. They did not plan their outfits, but maybe they're reflecting the mood of the market in this moment. Not red or green, but black. I think that kind of, we're not at a Black Monday, but, it was possible, right, going into today. Kevin, I'll start with you. I mean, we obviously see a lot of volatility today, people reacting to headlines or perceived headlines. As we sort of take a breath after these couple days of intense selling, what are your thoughts about what happens now?
The honest answer is I have no idea. Nobody does. And I think that, the reflection in the market today, you pointed out that huge spike that we had this morning. And if you actually measure it back to last night's low in futures, it was a 10% jump. Which is pretty remarkable. And then we fell 4 or 5% from there. And then obviously it's been choppy. I think that in and of itself just shows how markets have been keying off of anything that they can get in terms of a comment, whether it's relief on the tariff front. But I think what has actually been probably the more important story today, with all the comments coming out from the president's inner trade circle, whether it's Kevin Hassett or Scott Bessent or Peter Navarro, there is, or even Stephen Moran, who's been giving a speech, there is no sort of clear thread or common thread that they've sort of aligned themselves on. I think that's the tough part, is figuring out, is this negotiation or is this part of the sort of overall process and how they want to address things and focus solely on trade deficits? If it's the latter, then you could see an environment where tariffs do end up ultimately higher and they stay there. And it doesn't necessarily paint itself as more of a negotiation process.
Yeah, I mean, in Navarro, I believe, saying today, we're not negotiating. Yeah. Then you have other officials saying, yes, Bessent in particular saying, yes, we are negotiating, but it takes a long time to negotiate these kinds of deals. These are not comforting words for the market.
No, they're not, and that's what makes the market so chaotic, right? Because the market, the one thing the market doesn't like is all the uncertainty, right? It can deal with, if the news is bad, it can deal with it and you can price it and move on. But when one day it's yes, the next day it's no, the next day it's yes, the next day it creates all this chaos and this very uneasy, anxious feeling, which is why exactly what you saw today, the market started lower. We got this one headline, which while it was false, it was this positive headline that people perceived it, and the market immediately turned around and ran up. The minute they denied it, you saw what happened. The market went right back to negative. Now, it is funny because I want to see how we end the day. We're just kissing really the unchanged line, which is remarkable considering all the stress we saw global markets under overnight. Asia certainly, and Europe.
I mean, and certainty and uncertainty feel like they mean different things now, Kevin. And what I mean by that is, even if the administration came out tomorrow and said, we screwed up, obviously this is not going to happen, but even if they did, even if they came out and said, we messed up, we're gonna do 10% and that's it. That's across the board. Have they done enough to damage their credibility that it wouldn't reassure the market?
I think that's the ultimate question, and unfortunately, I don't think we'll have clear answers to that until you get well into the summer. And I say that because whether this is now something that has its own momentum and the risks to the downside for the economy have sort of snowballed on their own, and it doesn't necessarily matter what the administration says from here, I think there is a risk at some point where businesses just don't take those announcements seriously. Because if it is this on again, off again, the rules of the game are constantly changing scenario, that is basically the worst place you could be for a business. Trying to put together some sort of CapEx plan or put together some sort of hiring plan. If businesses don't know the rules of the game, then they're not going to play. So the reality is such that the back and forth and the constant changing of the rules is probably, in our opinion, what's going to contribute to more of a slowdown. So I think, in that scenario, let's say they do come out with some sort of baseline and they keep it at that, I think that you do probably just move into a stagnation, not an outright recessionary phase. But that's not the best place to be. That means you probably stay in the low hiring, low firing environment. It probably means that business investment slows and you don't get any sort of progress on any front that anyone's going for, whether it's bringing manufacturing back to the U.S., whether it's trying to close a trade deficit. I would think in that scenario, probably none of that gets accomplished.
Yeah, I mean, it's hard to imagine a long-term situation in which the tariffs on China are 54% or Vietnam are 46%, et cetera.
Well, I don't think they're going to. Look, we already saw over the weekend, Vietnam, Taiwan, even Japan is sending a delegation to the White House because they've already said they want zero rates. They're willing to negotiate.
Right, but we've been hearing from some people in the White House, no thanks, we're not interested. interested. So what do you do with that?
That's confusing because on the one hand, they're getting what they want, and then they say, well, we're not interested. What does that mean?
But they're not getting what they want if what they want is to even up the trade deficit, which makes no sense for a country of Vietnam's size to buy as much from us as we buy from them.
Right. Which is why you need to have that conversation. And I do think, I'm on the Scott Bessent side. I absolutely think that they're negotiating, they're willing to negotiate. I don't buy the Peter Navarro thing saying, no, we're not negotiating. I don't think that's true. I just don't think it's true. I'm in Scott's case where he said, look, it may be long, but we're going to negotiate. We're going to try to get this right. And I think that is what's going to happen. According to the White House, there are 50 countries that came up and said, look, we'll come over and we raise our hand, we'll come over, we'll have these negotiations. I'm not going to say everyone's going to get exactly what they want, but if they're willing to negotiate and there's a new trade agreement that's made with these countries, then I think ultimately that's bullish.
I think the difficulty in all of this, and you sort of started alluding to it, Julie, is that the so-called negotiations or the concessions that we're supposed to be theoretically getting from other countries, those, at least right now to date, seem to be based on tariff rates.
Right.
The reciprocal tariffs that were announced last week are based on trade deficits. So if you're only negotiating, as a foreign country, if you're negotiating down your tariff rates, that has nothing to do with the trade deficit.
Right.
So, and we know from the language coming out of the White House last night and even out of this morning, that the focus is on trade deficits.
Yes.
So I think that's the part that seems sort of contradictory and creates a little bit of this vicious circle where you can get all the concessions you want on tariff rates coming down, but is Vietnam going to take 25% of its GDP and then just automatically start spending more on U.S. goods to even it out? And that's the difficulty, I think, is that there's two sort of separate tracks to this.
Okay, so all of this said, Kevin, what the heck did people do, right? We look at history, even post-financial crisis, stocks, yes, they recovered, right? So do people just hold tight? Do they even buy the dip? We're still seeing some retail buying of the dip here.
I mean, well, the behavior has been such that there has been a lot of dip buying. I think that as a strategy, of course, it'll depend on everybody's, especially for the client base we have, it depends on everybody's situation. We're always sort of quick to say that neither panic nor hope are investing strategies. So in the best of times, hope is not a strategy, and the worst of times, panic is not. I do think that within and across asset classes, not just domestically, but also internationally, the past couple of weeks, I would even broaden it to year to date because of how well ex-US markets have done. This has been the best case to be made in terms of staying diversified. And I think sometimes you can get caught up in thinking that that's not the best strategy, especially when you have a huge, mega cap tech run in the US over the past several years. That's gotten hit the hardest recently. Not to say that gains over the past 3 or 4 years have not been good, but I think that these kinds of moments really emphasize and sort of put that exclamation point on why diversification is strong. Especially because even if you're in the bond market, yes, yields have retraced where they were from last Wednesday, but you're still getting a healthy yield if you're holding bonds for the life.
100%. And look, to your point, I think what the market has done, where we've gone, I think it presents a big opportunity for the long-term investor. You got to stick to high quality, you got to stick to mega cap names in the sectors. But if you look at names like NVIDIA that are down from $150, basically, it's trading at 86 today, it's NVIDIA. Consider where it sits in the nexus of AI and how that's changing the world. I think it's a huge opportunity for some really significant big names. So yes, I'm all into buying the dip.